Hi, I'm Louise. Maxis, one of Malaysia's largest telco counters. Is it worthy to be invested? Profit and dividend distribution. Between financial year 2012 to 2021, Maxis revenue was almost constant. On the other hand, its profit before tax and profit after tax were decreasing gradually. Likewise, it is shown in this figure that between financial year 2012 to 2021, Maxis earning per share had also been on a downward trend. During this period, dividend distribution was consistent. However, in the last few years, the amount of dividend distributed was lesser than before. Between financial year 2012 to 2014, Maxis dividend yield was as high as 6%. However, between financial year 2015 to 2021, Maxis dividend yield dropped to the 3 to 4% range. In financial year 2021, Maxis dividend yield was 3.8%, which was slightly higher than FD rates. Between financial year 2012 to 2014, Maxis annual dividend payout ratio was also very high, ranging between 160 to 180%. Between financial year 2015 to 2021, Maxis dividend payout ratio was lower than before, but still quite high, ranging between 70 to 100%. This shows that the company was paying out almost all of its profits to shareholders in the form of dividends. Management efficiency. Between financial year 2012 to 2021, Maxis' net profit margin was decreasing over time, indicating its relatively weak performance in the last few years. As the company's profits were decreasing over the years, between financial year 2012 to 2021, both of Maxis' return on assets and return on equity were on a downward trend. Stock valuation. Between financial year 2012 to 2021, net tangible assets per share of Maxis was almost constant at around RM1 ringgit. On the other hand, during this time period, Maxis' share price was decreasing. It appears that Maxis' share price is not directly linked to the assets value of the company. By comparing its share price and earnings trend, it is shown that there are some correlation between its earnings and share price. Between financial year 2012 to 2021, it is shown that Maxis' earnings were decreasing over time. Likewise, its share price was also decreasing with time. This shows that the share price is influenced by the company's earnings to some extent. Price to book ratio is calculated by dividing share price with net tangible assets per share. Lower price to book ratio, especially lower than 1, is preferable. This shows that the share price is undervalued and has room for upward movement and worthy to be invested. Recently, Maxis' price to book ratio has been on a downward trend, indicating that its share price is becoming cheaper over time. Although now that the share price appears to be cheaper, the price to book ratio is at around 5 times, which shows that the share price is still at a relatively high point. PE ratio is calculated by dividing share price with earning per share, which shows the ratio between the share price and the earnings of the company. If the ratio is very high, it shows that the share price is at a high point, which is not worthy to be invested. Between financial year 2012 to 2021, the PE ratio of Maxis ranged between 20 to 30 times. In 2021, Maxis' PE ratio was at around 27 times, indicating that the share price is still relatively high. The market cap is calculated by multiplying share price with the number of shares. Hence, higher share price will contribute to increasing market cap and overall valuation of the company. In the last few years, Maxis' market cap has been on a downward trend, indicating that investors are having a lower valuation on the stock. By considering the number of shareholders holding the stock, it is shown that between 2012 to 2019, the number of Maxis shareholders was decreasing. On the other hand, in 2020 and 2021, the number of shareholders were increasing, which might be due to lowering share prices that attracted more interest from investors. Maxis is also well supported by institutional investors. Its largest shareholder is BGSM Equity Holdings, holding 62.29% of total shares, followed by EPF, Amanah Saham Bumi Putra, Kumpulan Wang Persaraan, and so on, also holding significant quantities of shares. Financial management and stability. Between financial year 2012 to 2021, it is shown that Maxis capital expenditure spending is on an upward trend, indicating that the company has been investing significantly in property, plants, and equipment in order to expand its capacity and reach more customers. Between financial year 2012 to 2021, it is shown that Maxis equity was almost constant, while its debt level has been increasing over time. In the last few years, its equity to liability ratio was below 1, indicating that its debt is relatively high. Between financial year 2012 to 2021, it is shown that both of Maxis' current asset and current liability has been on an upward trend. In the last few years, its current ratio was below 1, indicating that the company's short-term debt level was relatively high. This could be a risk factor that might be detrimental to the company's financial stability. Between financial year 2012 to 2021, Maxis' cash flow was between Rm 0.5 to 1.6 billion ringgit, a very high amount, indicating that the company's finance is on a stable footing. Although the equity to liability ratio and current ratio show that Maxis' debt level is relatively high, note that Maxis customers are mostly bound to mobile network and broadband network contracts, and they pay monthly for the services provided. This leads to a stable source of cash flow for Maxis, which enables the company to maintain stable and healthy finances. By considering its cash flow per share, it is shown that in financial year 2021, Maxis' cash flow per share was Rm 15 cents, which is around 5% of the current share price. In conclusion, in the last few years, the market competition between telecommunications services providers has been intense, which led to the decreasing profits of Maxis. In addition, its dividend yield has also been decreasing in the last few years, down to around 3 to 4%. However, Maxis' market cap is large and its finances is stable. Now its PE ratio is about 20 times. Do you think it is worthy to be invested in? Also worth mentioning is that Maxis' main source of revenue stems from its customers' postpaid mobile network service packages, which made up 54.4% of its total revenue, followed by revenue from the prepaid packages, contributing 36.7% of its total revenue, and finally, revenue from its high-speed broadband services, which contributes 8.9% of its total revenue. That's all for today. Feel free to share your thoughts in the comment section. See you next time. Bye! The content above is for sharing and reference purpose only. It is not an investment recommendation. Investors are encouraged to carry out further research and analysis, as well as follow up latest update information before making any investment decisions.